Hello students, in this video we are going to see the sum number 10 unit 3 of management accounting. I hope everybody is having the questions. While seeing the video we keep the questions and follow this video. Okay, the sum number 10, the following is the trading account of Mr. Murugan. Calculate stock turnover ratio. You are asked to calculate stock turnover ratio and opening stock, purchase and carriage. In fact, trading account is given. Okay, so in this you are asked to calculate what? Stock turnover ratio. The formula for stock turnover ratio is stock TURN over ratio. The formula is cost of goods sold divided by average stock. Again and repeating, in management accounting formula you have to mug up the formula. Once you mug up the formula it will be very easy. Okay, stock turnover ratio formula is cost of goods sold divided by average stock. Keep in mind, sales is different and the cost of goods sold is different. Okay, here from the sum you have to calculate cost of goods sold. Okay, so cost of goods sold, how much? That is sales minus gross profit is the cost of goods sold. From the problem you can have the sales 78,000. The gross profit is also already been calculated 36,480. So which comes to 41,520 is the what? Cost of goods sold. So you substitute here cost of goods sold 41,520 divided by what you are asked to calculate? Average stock. Okay, average stock. What is average stock? Average stock is opening stock plus closing stock divided by 2. Again repeating, average stock is opening stock plus closing stock divided by 2. In the sum, opening stock is given, closing stock is given. You add these two things, opening stock and closing stock divided by 2. The average stocks comes to 15,160. So the answer is 2.74 times. That is the stock turnover ratio. That means on average 2.74 times the stock has been converted into goods of sold. Okay, so this is about the sum number 10. Okay, now we are moving on to sum number 11. This is sum number 10. Okay, mark it. Sum number 10 la you are asked to calculate stock turnover ratio. The formula is cost of goods sold divided by average stock. Cost of goods sold means it is sales minus gross profit. Okay, next we are moving to sum number 11. Sum number 11. One second, I am uncomfortable with this. Is it coming? No. One second please. Okay, we will mark it as. Okay, here we go. Sum number 11. Okay, in the sum number 11 some information is given. Keep with the problem already given to you. Kasi and company sells goods on cash as well as on credit. Okay, gross sales is given, sales return is given, debtors is given, bills receivable is given, provision for bad and debt is given, total creditors is also given. So nearly 1, 2, 3, 4, 5, 6, 7, 8 informations are given, and you are asked to calculate the average collection period. you are asked to calculate average collection period. Again, you have to come out with the formula of what is average collection period. Average collection period. The formula is debtors. What you need is to calculate average collection period. The one information is debtor. The second information is bills receivable. Kindly adjust with the handwriting, and divided by net credit sales. Net credit sales for the year. Okay. So you are asked to calculate average collection period. No other thing. You have to mug up the formula. Average collection period is equal to debtors plus, debtors means sundry debtors, plus bills receivable divided by net credit sales for the year. Okay. What you are getting? Into number of working days in a year. This is the formula. So debtors, how much is the debtors? Debtors, see the problem. Total debtors as on 31/12/1999 is 9,000. Right, 9,000. Next, how much is bills receivable? Bills receivable is, from the sum it is clear that it is 2,000 divided by net credit sales. How much is the credit sales? Here they given the gross sales கொடுத்திருக்காங்க. Next cash sales is given. Gross sales is given. Cash sales is given. Sales return is given. How to calculate the net credit sales? Net credit sales. How much? Sales minus cash sales minus return if anything. Okay, in this sum it is clear that the sales value is given, gross sales 1 lakh. Okay, minus what is the cash sales? 20,000 they are given. How much is the return? 7,000, which is equal to 1 lakh 20,000 minus 7,000. How much you are getting? 73,000 is what? Net credit sales. So you are substituting this 73,000 here into 365. 365. The answer which you are getting is 55 days. Answer you are getting is 55 days. So every 55 days you need to collect all the dues from the debtors and bills receivable. So this is about to calculate the average collection period problem. So what is the formula for average collection period? Again I am repeating. In another way you have to mug up the formulas. So if you are asked to calculate average collection period, the formula is debtors plus bills receivable divided by net credit sales for the year into number of working days in a year. Okay. So after submitting all those things, the answer you are getting is 55 days. Answer you are getting is 55 days. So in this video we have thought about the sum number 10 and sum number 11 of the unit 3. Thank you.